If Opendoor doesn't do this, nobody that exists right now, no company that exists right now is going to do it. It's Opendoor or nothing.
They have an enormous amount of data. Last year, they had 1.5 million sellers come to them and specifically ask for a bid on their properties.
If they're so well positioned now, we've got the right guy as chair, we've got the right guy as CEO. He wants to have the most aggressive office culture of any technology company. It sounds unbelievable. Institutional investors are in, we've got the retail army. What could go wrong here? Why would this fit?
Let's be honest, like my own experience with this company in these last 10 weeks is...
What's going on, everybody? Pio here with the one and only, the current, the legendary activist investor and hedge fund manager, Eric Jackson, the leader of the Open Army. Eric, thanks for joining, man.
Hey, great to be with you, Pio.
Yeah. So look, you've talked about your background. You've talked about everything that you've been kind of focused on over the past couple of years on many podcasts. The TLDR, for people that don't know, is your sort of claim to fame right now is you spotted Carvana really early after it had an enormous pullback from, $400 to $3 and then now back to $400. The next stock that you identified as having, potential insane value is Opendoor. I believe you bought it at 50 cents. Is that right?
No, it was a little higher than that. 51 cents was its all-time low on June 25th. I bought it around 74 cents a few weeks later. I noticed it when it was 51, and I was like, man, this thing is really taking a beating here. I had sold out of it maybe a year before, and then I noticed it did have these jumps, going from 50, up 15%, and suddenly it was 57 cents, and then it was then it would be flat, and then another day, it's up 15%, and now it's 64 cents or something. And I thought, those are kind of some, signals that I look for when one of these Walking Dead companies might come back from the grave. And so that got my interest, and people had been asking me about, what do you think of Opendoor? And so I had sort of dug into it, around the 50 cents, 60 cent level, and been doing some work. And there were some things there that sort of made me optimistic that this could be another Carvana situation. And unlike Carvana, I got into Carvana at $15, after, it bottomed at 350, came back up, which was still great. I mean, it was a great ride. But it sort of felt when I was noticing Opendoor, man, if I get in here now at the 70 cents level or whatever, this would be the equivalent of getting into Carvana at $4, $5, something like that. That's if you really want 100x, you gotta start as small as possible.
That makes perfect sense. And so, many people have been following this Opendoor story. I don't want to recap the whole story because you've talked about it on 20 podcasts at this point. The TLDR is you got in, the price went way up. People felt like it was a meme stock. They felt like it had a lot of momentum. The existing CEO, Carrie, did an earnings call that was very low energy and very disappointing. You essentially called for her to either be fired or to step down. By the way, at this point, I'm holding the stock, and I was like, this is very bad. I was like, this is not what I'm looking to see.
You weren't the only one saying that.
Yeah, I was like, this is very bad, right? But ultimately it worked, and she stepped down. She even sold her shares on the way out of spite, I'm assuming, which was pretty gnarly to witness. There was a 10, 15-day lull period where the Opendoor army was calling for Keith Raboy to be put on the board. They were calling for you to be put on the board too, and calling for a new CEO. At that time, the name being floated around was Travis Kalanick from Uber, right? And then what happened was Keith Raboy gets instated as the chairman of the board. The original co-founder, Keith Raboy, comes back, chairman of the board, couldn't be more bullish, and he brings in a CEO that was the COO of Shopify. You've talked about this on podcasts already. I don't want to get into the detail of it, but basically Kaz is perceived as a very bullish CEO, a product guy, and an excellent operator that's qualified for this position. I felt that you were a very necessary component in that leg before Raboy and Kaz came back into the organization. If Eric Jackson dropped out and said that he was out of Open in those weeks beforehand, I think it would have been devastating. Now, I think that you actually aren't a necessary component in the same way. Do you agree?
Well, yeah, no, the most important thing was filling that CEO position. And my biggest fear was that the old board was going to freelance and do it themselves. Yeah. And one thing I haven't mentioned to you is that I was involved in an activist campaign. That's really kind of how I started my career 20 years ago at Yahoo, in 2006, 7. And I ended up spending 10 years of my life trying to change Yahoo. And so And I saw so many bad boards, so many bad CEOs kind of cycle through there. And ultimately, like, value got destroyed at Yahoo. Like, they ended up being sold to Verizon, like a phone company of all things. And so that sort of trained me, I guess, unwittingly into knowing, like, Carrie was like bad news. Like, I just knew after that earnings call, there was no way she would be a successful CEO. She had to go now. You know, any extra days that she spent in the job were wasting time and money, and shortening the probabilities, shrinking the probability that this company actually would have a shot of being the Amazon of house, because it's just distraction and it's just a waste of time. So that's partly why I went so hard against her. And when people would say, oh, you got to make nice with Carrie, Eric, you're going to tank the stock and all this kind of stuff. I'd be like, the Discord group is the worst, actually, for like kind of the bleeding heart kind of liberal types. And like, you know, you're going to hurt, you know, it's not fair. You're going to hurt her feelings. I'm like, I'm not her husband, you know, like, I'm a shareholder. Okay. I don't care. Like, this is, she's done a terrible job. She's just done one media interview in her 2.5 years as CEO. How does that board even allow that to happen? She's got to go. And so that gave me the confidence. But, you know, I was worried the board would like pick a Marissa Mayer like type to come in and, you know, think that they were smart, and then she would be a distraction, and then that'd be a waste of the next 4 years, because you can't just fire somebody that you just hired. But luckily, I mean, I was communicating with Keith in the interim. And so I kind of had a sense of what he was doing. I didn't know he was talking to Kaz. I knew he had somebody who he really, really liked. And I knew he was kind of like, his strategy was kind of like, hey, we're going to go to the board and kind of like almost present it like a bear hug type of proposal. It's like, you do this, and you bring in our guy, you bring in us, and then, you know, we will help the company. And if you don't, we will like make fun of you and call you guys a bunch of clowns, stuff like that. So, and it worked, you know, so I agree that, you know, right now, the company is, I think, set up for success. It's just, you know, this is not even the end of the first week of Kaz as CEO. So we're still like very much in the early days. I want to help, you know, I will continue to help. I expect to continue to be an open shareholder for years to come. And you know, if they wanted me, I mean, I'd be happy to serve on the board as sort of like the voice of the shareholders. But if they don't want that, that's fine. And, you know, I'm going to have other stuff I'll be preoccupied with as well. So.
It's pretty amazing that this is where we're at now compared to 2 weeks ago, when it was just so, you know, unclear what was going to happen. And you really felt like, you know, the bedrock of the entire movement. It's amazing that we're here now. And it's just like, well, Keith and Kaz got it. So this is going to be really cool. On the subject of competitors, and you spoke with my business partner, Nick, a little bit about this, so I don't want to rehash it completely, but effectively Opendoor's data is the edge that it has against any potential competitor, right? Zillow revolutionized search for homes, right? And if you ask Keith Raboy, he'll say that the only, you know, component of the home buying process that's changed, you know, over the last 40 years is that now you have online search. But then Zillow just hands you off to the realtor. When you close, you have to go into a lawyer's office and sign some paperwork. There's nothing that's been really disrupted in the home buying process by technology aside from online search versus just picking up a newspaper or something like that, right? Opendoor's data is what gives Opendoor the edge over any competitors, because Keith has said that Opendoor has fewer competitors than Carvana. He's also said if Opendoor doesn't do this, nobody that exists right now, no company that exists right now is going to do it. It's Opendoor or nothing. And I think everybody agrees that like home buying should be disrupted by technology. 100 years from now, we're not going to do it the same way that we're doing it right now. Someone's going to come in and be the Uber, the Airbnb, the Amazon of home buying.
Right. Yeah, it's data for sure, but there's one other thing. So on the data piece, though, that is very important. They have an enormous amount of data. They are going to use that as they build out their AI team. They had a good AI team before 2020, I would say. And then if you were any good in machine learning or AI, you got picked off, and you're probably working now at OpenAI and Meta, and for millions. But they can rebuild it, a good team, and they have the underlying data to attract those people. So that's important. But there's a second piece that is really important, Pio, which is that last year they had 1.5 million sellers come to them and specifically ask for a bid on their properties. So that's a motivated seller.
Yes.
And so that's something that Zillow doesn't have. Zillow has like looky-loos. That's something that Rocket doesn't have. Rocket is like basically a plain vanilla mortgage company with a bunch of call centers in Michigan. Okay, so where people go for like a cheap mortgage. But it's not the same as like, I want to quote on my house. And if you give me a good quote and you tell me that you can close tomorrow and like money will get wired in my account, that's a compelling value proposition. So I kind of liken it to, the importance of like the search bar, for how you can monetize. There's so much you can monetize based on knowing search intent. This is sort of like seller intent. And I think what Keith is getting at, and I agree with him, is that there's really nobody else that in the, if you think of like all the real estate players, like what Compass or whatever, there's nobody that's well positioned for people to say, hey, I want to sell my house. Can you, Mr. Company, give me like a quote? The way that Opendoor is like perfectly positioned for it. And I also agree with Keith and like his point about like no competition. People gave up on iBuying. Like Opendoor pioneered iBuying. Like they've been around for like 10 plus years, and that was their primary business. And so when the economy sucked in like 2022 and 2023, they couldn't fall back on some other business that was making them money before. This was it. Like this, they just had to keep going and like trudging through the snow. And everybody else, like Zillow, who'd gotten into it late, and then Redfin, who got into it late, they were like, fuck this, I'm out of here. Like I'm going back to like selling ads, or I'm going back to like brokerage, which was making money, and can't touch this. So I think, they could get back into it, and probably they're going to get jealous in the next year or two when they see the momentum that Opendoor is going to build. But they'll be that much further behind, going from a standing start. They won't have the data, so I think Opendoor is in a really unique position here in that they're perfectly positioned, but not only that, it's a huge market that they're going after. So to become the Amazon of something or the Uber of something, like the ideal is to find something that's a huge market and that you can get to like a 1%, 5%, and then, hopefully ultimately a 10% share on.
Absolutely. And it's a technology effort to get there, right? And a Zillow or something like that. To me, it feels sort of like Tesla or Google, like with their self-driving cars versus like Ford or Chevy. Like I do not think that Ford and Chevy are going to compete with Elon Musk and Tesla when it comes to self-driving car technology. They both make cars, right? But which one's going to win the self-driving car, and which one has all the data? Which one can position that in a really unique way as a technology company? That's what it feels like to me for Open. So look, last question on Open here. If they're so well positioned now, we've got the right guy as chair, we've got the right guy as CEO. People are expecting a big layoff coming or something for the employees, like a downsizing from 1,400 to Keith keeps saying like 200 to 300 people. So everyone's going to be out of there. Kaz said in that one interview that he's done in the first 24 hours that he wants to have the most aggressive in-office culture of any technology company, and that they're announcing offices on Monday. He didn't even know where the offices are going to be, but people think maybe Toronto and Miami. We'll see. All this stuff sounds great. It sounds unbelievable. Institutional investors are in. We've got the retail army. What could go wrong here? Why would this fail?
I think it could fail, or, I guess the risk would be that just from a macro perspective, like Powell keeps rates higher for longer. That just like continues to keep the housing market stuck, slow, lower volumes than it would be otherwise. And that's a drag on the company. I mean, the optimist would say, they had their first EBITDA positive quarter just now when mortgage rates were like 7%. So, that's promising. And, so hopefully they can still even, and then they're going to be a heck of a lot more profitable now if they truly are whacking 80% of the headcount. It's going to free up something like $276 million a year. I think I saw, an estimate of the savings. And let's be honest, like my own experience with this company in these last like 10 weeks is like, I don't know what like most of these 1,400 people have been doing. Like, it seems to be a really slow moving culture. So they need to kind of, snap into it. So I think the concern would just be that, but I agree. Like they've got the right people together. They know what to do. They're technology people. They're going after a big market. There's something else, which is that the people associated with it, I don't want to say they're magical or sound like a weirdo, but I mean, I think all of us would admit that there's something special about an Elon Musk. There's something special about an Alex Carr. Okay. And that doesn't mean that you can't be like a boring guy like me from Toronto and can't build a really, interesting business. Shopify is not, it's kind of like a boring little business, but it's a great business. But I would just say like, there's something different about like when you get these people that are like, they've got a halo on them. They've got pixie dust, that's sort of, and that people believe. And that's what Palantir is. That's what Tesla is. And I think Opendoor really does have that legitimate case that they could be one of those like next companies, because these people like Keith and Eric and now Kaz, I do think they're in that same zip code like of those other guys, and that all that means is higher multiples, and people will bitch and moan and go on CNBC and say they don't deserve it, and what it doesn't make sense, and iBuying's never proven anything in the past, why should I believe it now, and all this kind of BS. But what we've seen with Palantir, what we've seen with Tesla, that durable multiple, the premium multiple sticks.
Absolutely. And yeah, we didn't even mention Eric Wu, former CEO and co-founder, back on the board with Keith Rabois. Didn't even, think to mention that. So that's another very special thing. Well, look, we'll see where Opendoor goes. Today was a little bit of a down day after running insanely hot over the past, call it 10 days, 10 trading days. So yeah, can't wait to see what comes to that. Two more stocks that you consider your babies are Cipher and IREN. I actually first bought IRIN in December 2023 for under $4 because I interviewed Mike Alfred, who is one of my favorite Twitter follows, because Mike's just an oracle. I mean, he's just all over it. He called this years ago. It's kind of insane. I almost didn't believe it when he just kept talking about Bitcoin mining companies doing deals or being acquired by Mag 7 and big AI companies, because they need the data centers. They need the processing power, right, for AI. And it sounds great, but the idea of like a Mag 7, as a Bitcoiner, the idea of a Mag 7 company coming and buying 8% of a Bitcoin mining company or something like that just felt like a kind of a pipe dream, especially since in 2022, there was no indication of any support from any big tech company towards Bitcoin or crypto. It was very uncool to be associated with crypto and Bitcoin at that time. So how big do you think these things can go? Because it's been an insane 3 or 4 months at this point for IREN and Cypher both. And then, of course, TeraWulf Mining having the deal with Google and Nebius Mining having the deal with Microsoft. Are these $300 stocks over the next 5 years in your mind?
I think so. And I think they're both 100 baggers. And I, shout out to Mike Alfred. So Mike was... has been a huge influence on me too, in terms of my thinking about both IREN and Cypher. In fact, earlier this year, I sort of had this huddle with my internal team at my hedge fund, and I've been building like this AI team to kind of build all these different kinds of models for superior investment. But we tried so many things. We were like in so many different directions, like building option models, earnings models, crypto models, and all this kind of stuff. And I said, we got to really just focus in on a couple of things, crypto, and then we have to focus on these 100 bagger ideas like the Carvana idea. And so we had just had this meeting, and we were just kind of focusing in on that. And then I listened that weekend, I think it was on a Saturday, I was in my backyard and listening to a Spaces by Mike Alfred. And I heard him just talking about both companies. And the thing that just made me sit up straight on my backyard chair was he was talking about IREN, and he's on the board. Yeah. And he said, people don't understand, I didn't join this company just to be a 2 or 3 billion, on the board of a $2 or $3 billion company. When I joined this, I believed one day, with this team, this could be a $500 billion company. And I was like, what? 500 billion? And I think they were, maybe just above 2 billion at the time. And when you started to research both, you realized what was really cool about both companies is that more so for IREN, but to some extent for Cypher, but there was a whole sub community of people that just were so dyed in the wool, like Mike, about IREN and Cypher, and they totally believed, and they totally were super smart, and they had done so much research. But the second thing you noticed was that, wow, this thing had had a few false dawns, because the stock had been very volatile. And this was in May, so this was just weeks after the, Liberation Day bottom. And I think IREN got down as low as I think it was below $6.
Yeah,
on
which
April
is
23rd.
nuts.
Yeah,
the price action is crazy.
Today I think it's going to close at 40. It's it's wild. But when you talked to the people, and I remember the night before I came out with my Opendoor tweet thread, I was on a 2-hour Spaces with some guy from Thailand, a Dutch guy, I think he is, from who lives in Thailand, who just knows everything about everything related to IREN, and he's spent the last 2 years of his life just almost exclusively researching IREN. And but so I didn't know that both of them would take off immediately. but I built my position. I think IREN, I built the position in the 9s, and I think Cipher was in the 3s, the high 3s. And I think this was like early June, like after I kind of did some more research after hearing that Spaces from Mike. And like the penny that dropped with me, and then it was like backed up by kind of checking this out and with the different AI models that we have as well, was just that all these stocks, like they trade like Bitcoin miners, and like people are kind of, you get the sense like Wall Street's kind of sick of the Bitcoin miners. Like they never make money. They pay themselves too handsomely in stock compensation and all this kind of stuff. And even when Bitcoin's ripping, like the miners sometimes they are, sometimes they aren't.
Yep.
And yet like the way that they should have been perceived, or they should be perceived today, were as like basically pipelines of gigawatts to basically power the future needs for AI. Because they were building these data centers, they were building on the ground, they were buying the land, they were making the connect, the deals with what's the one in Texas, Epcot, or something like that. Anyway, like basically locking in like long-term, very, very cheap energy for those locations, building the facilities. In some cases, like IREN buying the actual Blackwell chips and putting them in there. And so when you started to dig into it, you had some CoreWeave, which had just IPO'd, flying, doing great. Yeah. And yet they were just like a middleware kind of company. They didn't own any land. They didn't own, any of the, have these assurances of energy connections. They were trying to now like back into that through doing this deal with like Core Scientific. It just seemed like IREN and Cypher, like both of them had 3 gigawatts, in the can, basically, that were going to be lit or energized within 12 months for IREN and 18 months for Cipher. And like, that's just huge. And like way, more than like the TerraWolves or the Nebiuses or some of the other players that are out there. Hut I like a lot, but they've been sort of cagey and sort of disclosing exactly how much they have in the can, even though it's probably bigger than what they have shared. I just felt like there would be big deals to be done. You knew that Project Stargate was going to happen with Oracle and OpenAI, but they hadn't announced exactly how they were going to fulfill that. And every quarter you'd hear like Google and Microsoft and Meta talking about how, we're just upping the CapEx budget for another 10 billion in CapEx, to our target for next year. And yet like the announcement has to actually lead to boots on the ground and like stuff happening. And so the big advantage that IREN and Cypher had was like, this had been, they'd started to work on this in 21 and 22. And so like the stuff was going to be coming online much faster than if you make some grand announcement today and actually have to go out and find a site, negotiate and then buy it and build it and all that kind of stuff. So I just felt like there would be this crunch and there would be like this huge, shortage mentality that would sink in. And then, that's what leads to prices going up. And so they were kind of positioned to be sitting well in the catbird seat, and they still are. They haven't announced their deals, but now we've got this sort of rush where Nebius did this deal. It's only for 1 gigawatt in New Jersey, 1 gigawatt with Microsoft, and they've valued it at 17 billion. So it doesn't take a rocket scientist to do the math and say, well, what's 3 gigawatt? Well, 3 times what Nebius did. Oh, okay. And it might in fact go up because the price sort of keeps going up, like with each sort of passing month. So I love them both. Love Mike. Haven't met Mike in person yet. He's invited me to come out and see him in Vegas sometime where he lives, but and I look forward to that. I think he's a super smart guy, and he was really even more bullish on not more bullish because he's on the board of IREN, but like he was really adamant about Cipher and both those companies, just great CEOs. Like once I announced that I had positions in them, like unlike Carrie at Opendoor, roll out the welcome mat, like hey man, let's talk. I mean, thank you so much for your support. It was like. Versus like the crickets that I got from Opendoor, it was like totally different. That was another reason why I knew she had to go.
Well, yeah, I mean, Mike, as smart as they come and as adamant about Bitcoin mining as they come, and that hold was just challenging. December 2023 to earlier this year, you go from, $4 to $6, but you're watching Bitcoin almost triple, maybe actually triple or quadruple. I don't remember how much it was at that time. You're watching MicroStrategy absolutely melt faces. Kind of makes you feel like you're not in the right spot. But Mike said the whole time that it's cyclical. These cycles just have different moments where different assets heat up. It's also why he's big into Ethereum right now. And he's been beating that drum for about a year. It took a while. He's always early, right? So it took a while for the Ethereum to start to catch up. All the Wall Street guys rolled out of bed and decided that they wanted to pump Ethereum. But anyway, so moving on from Bitcoin mining, if we talk about crypto a little bit, I've heard you talk about crypto. You've talked about Ronin. You've talked about, being interested in crypto. How do you determine what to buy in crypto right now? Because I think it's gotten harder and harder. When I got into Bitcoin in 2020, by 2021, I started experimenting with altcoins and with NFTs, so just further down the risk curve. And with NFTs, it was actually pretty easy because there were only like 9 or 10 that you could buy at the beginning. They all pumped. It took months for them to pump, and they just pretty much continuously went up. Now with the assets further down the risk curve in crypto like meme coins, these things pump and dump in like 20 minutes, right? And it's just a complete disaster. It's just not the game that it once was. How do you find value in crypto in 2025?
I've always been interested in data. And I remember like back in 2019, having like one data guy that I worked with who was like scouring through App Store rankings. And like we noticed, for example, like 3 months before COVID hit, that there was one weekend, I don't know if you remember this, where the news reports were saying like there was some lockdown in Wuhan, China, and like they were welding people into their apartments, all this kind of stuff. And I remember coming in on the Monday and saying, can you check the App Store rankings and see whether like was there a spike at all in like Zoom downloads in China like over the weekend? And he like came back a couple hours later and he's like, oh yeah, it was like three standard deviations higher than normal. And so like we immediately went out, or I went out and I bought a lot more Zoom stock and like a bunch of Zoom call options, and then didn't know it would be a like some global pandemic or whatever, but those things Zoom. So I've always been interested in that. And when the crypto like the last 21 bubble went on, I was like fascinated with all the Axie Infinities at that time, and like the gaming altcoins that and I had a friend who was working for Facebook at the time. He was like, this is going to be the new platform for gaming, crypto. And, because you're going to be able to take your sword from one game and like port it to another game. And you can only do that in crypto, or you're going to get to level 54 of your game and you could sell it. You could rent it to Pio, who wants to pay you money, because you'll immediately go to, all these use cases that sounded good at the time, but probably aren't that, real in real life. The thing that he said is like the beauty of the blockchain though, is that like if you download all this data about Axie Infinity, or the other one was Gala that I remember was popular at the time, he said, it'd be like coming in on Monday morning as a stock investor and having like real-time access to the Activision, live feed on how their games are doing, or like Grand Theft Auto or something like this, and knowing how to, should I trade the stock based on like, the number of downloads over the weekend or something, or how ARPU changed over the weekend. You have all of that real-time data available in crypto. So I immediately kind of started building a team just to do that, and ran into some roadblocks where I'm located in Toronto, like FTX went under, and then basically the regulator for me said like, okay, that's it, no crypto trading for anyone. And I was like, okay. So we kind of had to pivot, but we had done all this work like downloading, the Ethereum blockchain and kind of analyzing different coins on it. What we realized is that we could build better AI models that were more predictive of like where prices were going with crypto versus stocks alone. And the big reason why was just there's like a much richer data set there. So you had like all the wallet information, like whale information. You had like stablecoin, money moving in and out off of different blockchains. And we could just, you just got higher hit rates on these models that you would build. And so we were planning on using them for the purposes of like once the Bitcoin and Ethereum ETFs emerged, suddenly like my regulatory issue got resolved, because I could apply this sort of knowledge to trading those ETFs in my portfolio, because those are blessed by my regulator, whereas crypto was not. But that's also around the time when all these like Me Too treasury companies started coming about, aping MicroStrategy. And so I got approached like a few months ago from some group where they said, hey, Eric, do you want to do a treasury company too? And I said, well, sure. I mean, it sounds interesting, but I kind of sort of don't get like the differentiation between any of them. And I said, well, like, what if we actually did something a little different as a treasury company? And it's kind of like a generation 2 of it, where we use the AI models that our team has built, and we use it for 2 things. Like, one is like, if you're a treasury company doing Ethereum at the beginning of this year and you raise $100 million from the public market investors, and then, the way that all these companies work now is you get the 100 million, you buy 100 million Ethereum the next day through your Coinbase institutional account, right? But if you did that, obviously, with Ethereum, on Jan 1 of this year, by April 23rd, you would have been down 58%. The value of your treasury had dropped because Ethereum just nosedived, for the first 3.5 months of this year. So what if you used an AI model that could kind of inform you before you spend that 100 million? Hey, now's not maybe the best time to put that money to work on Ethereum. So hold back here, wait, 2 weeks, let's reassess, and then 2 weeks comes, and then finally, oh yeah, green light, now you can buy it. So that's one way you could use AI. Second way is when you actually start building the treasury itself. Obviously, everybody's, nobody's going to sell. That's what they all say. But we go through periods of volatility, and sometimes Bitcoin's more popular, and sometimes it's not, and So what if you use the AI models again to help you hedge the value of your treasury and kind of create extra income, either selling calls or selling puts or things like that? What if you have a model that works? They said, oh, that sounds interesting. So we started talking about it. I went back to working with my guys, and I said, well, we're going to do this, guys. But what should we do it with? Should we do it with Bitcoin? Should we do it with Ethereum? Should we do it with Solana? And so they went back, and I was expecting them to come and say, Bitcoin is superior or Ethereum is better or something. And interestingly, they came back and they said, well, we found out that if you do both Bitcoin and Ethereum as a multi-asset, strategy for a treasury company, the results are better. Because we did these 200 scenarios, and it turns out sometimes Ethereum's up and more popular than Bitcoin. So it's kind of almost like having a more diversified portfolio. If your goal is to max the value of your treasury and the max, your potential MNAV that you're going to get and your, returns over time, it's better to do a multi-asset strategy. And we also found that in the different backtesting results that the hedging part of the portfolio really helped us avoid big drawdowns. So we ran this we found out, for example, in the year 2022, which is obviously the worst year for crypto. Because of our hedging approach, we would have had a 3% drawdown in the value of the treasury that we operated that year. Whereas that was the year that Bitcoin itself dropped 65%. And I think MicroStrategy's shares that year, because they're more leveraged, they dropped 75%. So that's for me anyway. If I was an investor, I'll pay a higher MNAV for a stock like that. So, long story short, we're planning on listing, through a reverse takeover, hopefully by November of this year. So it's in the works. So stay tuned for that. But I'm super excited about that.
That's kind of like a hedge fund, right? In a publicly traded hedge fund. I mean,
it's like a multi-asset crypto mini hedge fund, strategy. So I think it's, and truth be told, I think that's where the next generation of crypto treasury companies are going to go. This crypto VC friend of mine was saying, the Gen 1 ICOs didn't make any money. It was the Gen 2 ICOs that made the most money. So he sort of thinks that it's going to be the same for treasury companies. A lot of these Gen 1 treasury companies will probably trade below MNAV. And then you'll have the opportunity, if you just trade a premium, you could pick a lot of those guys off too. So,
yeah, I mean, to be fair, this year that trend was essentially just an extractive trend, similar to what you see in crypto, where most of those companies don't feel that real to me. I'm a big MicroStrategy guy, but seeing some of those random companies launch, I wasn't really super impressed and felt like they were just kind of chasing the trend and individually, getting rich in the process. And I think they accomplished what they set out to do. It was almost like the SPAC thing in many ways, I think.
I also think it's interesting, though, that the most successsul of the new companies has been Tom Lee's, in my opinion, BMNR. I would have thought, if you'd asked me beforehand, and you said, I got this company SBAT who's going to IPO or whatever, come public with their Ethereum strategy, and they've got this Joe Lublin guy who's going to be the face of it. He's a co-creator of Ethereum or something like that, and Tom Lee doing his thing. I would have thought that the co-creator of Ethereum would do better because of the academic pedigree or something like this. And yet it's been totally the opposite. And I think I love Tom. I'm a huge Tom fan and admirer and, know him. And he's a great person too. But he's the thing about Tom is he's super smart. He's authentic. People, listen to him on CNBC. They trust him. And I think it just sort of reminds me of like Trump winning the election and like going on these 2-hour podcasts. They didn't always agree with him, but they just sort of liked that he was a real enough person they could go on those things and like have a conversation, as opposed to Kamala, who was like, hiding out and too scared and had to be like all, stage managed and all this kind of stuff. I have that going for me. And I think like that's sort of like what people want and they expect now from CEOs or whoever, crypto influencers or podcasters or whatever. They want authenticity. And so it's like in the conversations that I've had with investors about this like little treasury company, they're like, yeah, Eric, you're going to be like a mini Tom Lee for us, and you're going to be able to go out there and communicate and talk, and people will believe you and they trust you and all this kind of stuff. So that's the plan anyway. I mean, that's, obviously you have to keep coming up with good ideas, otherwise people will stop paying attention. But I'm looking forward to that.
That's awesome. Can't wait to see it. And yeah, I'm a huge Tom Lee guy too. And I'm not surprised that he's outperforming Joe Lubin, because the reality is a lot of crypto guys are completely out to lunch. I've spent time with CEOs of top 10 blockchains, founders and CEOs of top 10 blockchains, and I've asked questions, and I've always been blown away at how out to lunch they can be. It's just completely insane, like real head in the cloud stuff. A lot of these people are in the position that they're in because the blockchain generated a lot of money through an ICO when the market was insanely hot, and they just still have that money. It's not that they're operating right now and benefiting from, work that they're putting in right now. Joe Lubin went on TV and said Ethereum was going to flip Bitcoin like 6 weeks ago. He said that on TV 6 weeks ago. I was like, what is this guy talking about? Why would he even, say that? Like in terms of price, he was saying the Ethereum price is going to flip the Bitcoin price. I just couldn't believe it. But anyway, that's neither here nor there. What do you think about MicroStrategy? What's your opinion on MicroStrategy?
I think Saylor is a brilliant communicator, and he's brilliant in the sense that he sort of from a Wall Street financial engineering perspective sort of noticed this gap in the market where he could present MicroStrategy as almost like this sort of like yield strategy to a group of investors that you wouldn't necessarily think would be attracted to Bitcoin or to crypto at all. And yet he saw that and saw how he could, use the volatility to his advantage. He's a wild guy though. Like I met him like in the, after the .com collapse, because I was like working for a little software company in Toronto, and we were like I was like the head of business development, and like when business development is just a fancy way of saying like you try to assign like partnership deals with companies. And so like we flew to the swankiest offices I've ever seen in like Northern Virginia, because they had just had some like big successful, IPO in like 99 or 2000, but then the market crashed. So they built this huge, amazing facility and then fired everybody. So it's like kind of ghost town when you walk through to the boardrooms where I had the meetings, and I, briefly kind of met him. But like, I admire him, and I admire MicroStrategy. But I just, he's the grandfather of like what I would call it like a Gen 1, treasury company. And so I just think, God bless and, best of luck. But I'm more interested in like a multi-asset type of an approach. I expect like in our treasury company, we're going to find some like interesting altcoins or smaller coins. I think, it's like Wall Street is like barely understanding Bitcoin now. And now, like, I think there's still going to be huge upside with Ethereum, especially if the SEC, which I expect, is going to allow for staking from these Ethereum ETFs. I think that's going to be a huge thing that's supposed to happen before October. That's going to have a mega impact on the price of Ethereum. But like most regular, like TradFi Wall Street investors, like, don't even get Ethereum. And then they just sort of think all altcoins are scams. And they're right. I mean, pump.fun, it's filled with a bunch of scams. But you don't find Carvana everywhere though. And so I think there are some like needles in the haystack there, and some opportunities. There was one guy at Crypto VC who was saying like, I've found my Carvana. It's this little, dinky little, coin that nobody's paying attention to. It trades at like a Gazprom PE. This is going to be my Carvana. You wait and see. And I agree with him. I think there's going to be like these kinds of hidden gems out there. And for anybody who like knows anything and can do the work and investigate, you could potentially, that could end up being like the jewel, forget Bitcoin and Ethereum and Eric's fancy AI models. I find one or two of those that could like be the thing that becomes like the grand slam home run for the stock and the treasury company.
Absolutely. One last question on MicroStrategy. Do you think over like the next 10 to 15 years, it becomes essentially like a Mag 7 type company, like it gets that big?
Well, I am bullish about companies in general, corporate America putting Bitcoin on their balance sheet or Ethereum on their balance sheet. I mean, I think like all of these coins, like BNB, I think is going to appreciate tremendously like over the next little while. XRP will do well, like even though like some there's more skeptics there. So like all these coins, I think it makes sense because they're going to have these rises as the kind of the supply shrinks in them. That it makes sense for all companies to do this. So I think by extension, like MicroStrategy will do really well and possibly could be considered like a Mag 7 of the future. But if everyone is doing it, then it becomes like less of a differentiated story than it is today. So.
Makes sense. So we can maybe wrap just with this last topic. So, Mike Alford, who was referenced earlier, he's into Oscar Health. And more people are talking to me about some of these sort of disruptive pharma and healthcare companies like Oscar and like HIMS. I have a tiny Oscar position, a couple $1,000. I don't have any HIMS. But do you have any, opinion on these types of companies?
No, not really. I haven't done enough work, and they haven't I have a bunch of models that sort of like run in the background, get updated, and looking for certain technical things like volume changes, moving average, changes, and fundamental changes in the companies themselves. And then certain things happen like that would relate to like an Oscar or HIMS. I'll get an alert, and it'll give me a chance to kind of dive deeper and see whether it's something that I want to put in my portfolio. But I also get ideas through just like word of mouth and people making suggestions and recommendations, and then I study them and then decide look cross-check them against those other technical readings. And I've certainly had people suggest those two names and many others, especially since Open started to take off, because they want me to look at it. And I know a lot of smart people have told me they really like Oscar and HIMS, both of them, for different reasons. But it's not something that like I know enough about either one to kind of really give it an informed opinion. And they haven't come up like in the technical flags so far to suggest like, oh yeah, like this thing is about to 10x in the next year or something like that. So those are still in the bullpen, I guess, for me in terms of names to potentially like just keep researching and keep looking and keep monitoring how things develop for both of them.
Sure. Last question. So we talked about obviously Opendoor, which I guess would be like technology, real estate sector, Bitcoin mining stocks being positioned as AI data centers. That's like mining and AI, obviously crypto. What other sectors are you really like bullish on? Like anything else out there that you think like that sector is one that really is set to, do some great things?
Well, it's always tech a focus for me. But I wouldn't say it's any like subset of tech, beyond like, I agree with you. Like, I think there's there might be some other AI HPC names or Bitcoin miners, that are going to benefit from this wave, and I might want to jump into, but it's either like, it's less of the, a health sector, like an Oscar or something. It's more like what I look for is the Walking Dead type of companies where, what's been thrown out in the trash that like people just have given up on the way that they did for Carvana and for Opendoor, that could potentially like rise from the dead. Or what are some names that are just like, maybe they were trading only in Canada. Maybe they were trading on some like Pakistan stock exchange or something. Nobody knows about them. So it's sort of like unknown stories, but something's happening there. Maybe they're on the Swedish stock exchange or something like that. And yet, like, if I can find them, identify them, and, it's not just a niche story, but it's like potentially like an exciting, like, I don't know, Spotify type of story, like coming out of that country. Then, with some attention and, shining a spotlight on them, those names can do really well. So those are the two like types of companies that I'm typically looking for that that can have the potential to 100x rather than healthcare specific or e-commerce specific or something like that.
When you say that, I think of MetaPlanet, because it's been kind of, the baby's been thrown out with the bathwater with the Bitcoin treasury companies, and it's Japanese, so it's the Japanese stock exchange, so it fulfills two of your things. I have like a 2 grand position in that, nothing crazy. And then Grab. Are you familiar with Grab?
Yes, Grab is another one that I've had a bunch of people tell me about in the last 3 weeks. Like, you got to look at Grab. You got to look at Grab.
I don't know anything about Grab. I've used Grab when I've been in Thailand, but I don't know why suddenly everybody's saying you got to buy Grab.
I mean, I remember when they de-SPAC'd, I think they were a de-SPAC, and like, I think it was Brad Gerstner who was like, involved with them, and he was like banging the drum for them on CNBC and stuff, talking about them. And then they went quiet because I guess the stock went down, and now, but it's definitely picked back up in the last few weeks for sure.
Maybe one to watch. Well, look, ladies and gentlemen, give Eric a follow on Twitter. If you just search Eric Jackson, he'll pop right up. Just broke 100,000 followers, right, Eric?
Yeah, exactly.
Congratulations, man. Thanks so much for joining.
Thanks, Bio. It was fun.
Yep, my pleasure.